Hamas, the terrorist organization, raised over $100 million worth of crypto since 2021. Reports that the Wall Street Journal was citing came out correcting the record. They explained how the journalists had misread the data. The Wall Street Journal has yet to correct its story. It's a shame, like the two reports that you're basing your story on come on and say you're wrong, and the journalist doesn't correct it. From a place like the Wall Street Journal, it doesn't make any sense.
A quick shout out to our sponsor who made this video possible, Unlimit, borderless payments, local to local, local to international. UNCX Network is a leading DeFi multi-chain service provider and the creator of liquidity locking. More on them later in the show.
Welcome everyone to Crypto with Cami, where we'll be discussing the biggest developments and headlines in crypto and DeFi for the week of October 23rd. Pretty active week this week, especially on the ETF front. We'll be talking about what's going on there in Bitcoin ETFs. We'll talk a bit about, again, the SocialFi sector. We'll discuss different project updates from Polygon, Arbitrum. We'll talk about whether crypto is being used to fund terrorism. And I have my review on a recent SBF documentary. So let's get started. Okay, so the week started with different hints from ETF front that BlackRock fund was about to launch. So as you know, everyone is looking very, like, all eyes are on everything related to BlackRock's Bitcoin ETF. So first thing that happened this week is that one analyst spotted an SEC filing, an update to an SEC filing where BlackRock said that it was preparing to seed its fund as soon as this month in October. So this would be providing the initial funding for the ETF to purchase the initial units of Bitcoin. This really kind of sent the market into a frenzy because people were saying, you know, this amendment shows that BlackRock is getting ready to launch the ETF. Then the next thing that the market noticed was that BlackRock already has a QSIP identification number for this ETF. And, you know, this was interpreted as a further sign that things were almost ready, that the ETF was about to be launched any minute now. Then the next day, more signs, more tea leaves were getting read. Somebody picked up from the DTCC website that, you know, the DTCC is the place where it is the Depository Trust and Clearance Corporation. Very arcane securities website, but like I said, everyone is just scouring the web to find any sign possible to see where the process stands with this ETF. So somebody found that the BlackRock ETF was listed under DTCC products. You know, the DTCC has a huge list of all the ETFs in existence, also proposed ETFs. And it appeared that for the first time that BlackRock's Bitcoin ETF was listed in this website. Here it is. Bitcoin price went crazy over this. It surged past 30K, climbed to the highest this year, and suddenly the website crashed because, you know, all of us on crypto Twitter were just compulsively checking the DTCC website to see the BlackRock ETF there. And then when the website went back up, the fund wasn't there anymore. So more speculation. What does this mean? And then it went back up again. So in any case, you know, there was lots of movement on the ETF. It seems like things are in motion, but then DTCC said actually that the fund had been there, sitting there on the website since like August. So it wasn't anything new. in this case. But at least, this update from BlackRock in its filing to the SEC saying that it would cede the fund, this QSIP number, it all lends to this narrative that BlackRock's iShares Bitcoin Trust is about to launch. The truth is, the SEC is still reviewing it. We don't know by when they'll have their decision. They have until January to provide their decision. So there's really no reason to think that they would be able to, that they would make a decision earlier than that. So we'll see. But in any case, all this ETF speculation really just kicked off a new rally, starting with Bitcoin, but also bringing everything else up together with it. So Bitcoin was up almost 20% this week. It's at over 34,000. Ethereum was also up 15%. Is at around 1,800. And, everything else is rallying and people are getting optimistic on crypto again. Not sure if this will be a sustainable rally. DeFi is also up on this. To me, like I said, there's no reason to think that the SEC would hurry its decision on approving a Bitcoin ETF. It's not like it's been keen on crypto before. So that's one. The other reason I'm not so convinced on this ETF rally is that, the fundamentals behind Bitcoin and crypto rallying on an ETF is that, yes, like a huge, the world's biggest asset manager, BlackRock, is going to start trading or operating a spot Bitcoin ETF. That means that BlackRock is going to be distributing this product and will have to buy Bitcoin to back the trades on this fund. So that means more demand for Bitcoin. That means prices will rise. It also, is legitimacy for the space, the fact that BlackRock has this ETF, and so on. But by the time that all of this actual demand comes in, like BlackRock issues this ETF, and then the thinking is, well, now Wall Street is going to go buy this fund, and then BlackRock will buy Bitcoin in as a result. This takes time. I doubt that the second that the ETF lands in the market, there will be sustained, continuous demand for Bitcoin. So yeah, it seems like the market is pricing that the ETF is going to be approved. But once it is, then what makes sense to me is that the prices will come back to earth and then will have to be propped up by actual demand from funds, investors buying up this ETF. So yeah, I don't like to be a downer, but I don't really see legs to this rally, to be honest, based just on the ETF news. Now, it's a different story when we're considering macro factors playing in here as well. And this is a really interesting take by Arthur Hayes, which we wrote up at the Defiant. Arthur Hayes, very well-respected investor. He's a BitMEX co-founder. I guess well-respected in terms of his investments and, thought leadership and so on. But he was under regulatory scrutiny. So anyways, that caveat there. But he has some really smart takes on the market. And he was saying that Bitcoin is rallying and will continue to rally not because of the ETF, but because of macro conditions. So his argument is that the US is about to embark on this spending frenzy because of the international conflicts that it's involved in, namely Ukraine and Israel-Hamas war. So with all this increased spending, with the economy not improving in the long term, with inflation still not under control, but overall with the economy not picking up, that means that long-term rates will be lower. There will be a lot of spending, which means that more liquidity in the market, lower rates, and that of course is fuel for crypto, for risk assets. This is the argument that Arthur Hayes is making. The US is going to be involved in two international conflicts, Ukraine and Israel Hamas, that there will be increased spending because of these military conflicts, that the economy is in bad shape and it will continue deteriorating. This all means that treasury bonds and the US dollar will sell off, and that investors will seek returns elsewhere. And also with more liquidity in the market from higher spending and lower rates, that is usually fuel for crypto and for risk assets. So, that to me is more convincing than a Bitcoin ETF driving a long-term rally. Like, I see the argument for a short-term rally from ETF news, for sure. I don't see ETF news kickstarting a full-fledged bull market, but if Arthur Hayes is right about these macro conditions, then that could be a much more sustainable setup for, increasing crypto prices. Now, off to lighter topics.
Before we continue, a quick word from our sponsors. Grow your business with Unlimited's borderless payment solution. Leverage one of the world's largest proprietary payment infrastructures available in Europe, LATAM, APAC, Africa, and the UK. Looking to grow your community's trust in your project? Explore UNCX Network, the home of liquidity locking and secure DeFi token services. With over 40,000 locks created and TVL upwards of 200 million, they have a reputation for secure products that developers can rely on. Their services cover most EVM chains and include an ILO launchpad, token vesting, token minting, staking, and farms as a service, and the most reputable liquidity lockers on the market. Now, back to our show.
Looks like Friendtech is falling out of favor. There's a new SocialFi cool kid in town, new Bitcoin City. It's a sort of fork of Friendtech, and many big accounts on Friendtech are moving there. Wombatus, Pranksy, and others sold their keys and moved to this Bitcoin-based SocialFi platform. So interesting to see people building on Bitcoin. Not sure why that these accounts are preferring that, but to me it just seems like they got tired of this app, which seemed to be pretty fun at first, but then wasn't innovating as much, continued to be very clunky, very buggy, and they started betting that some other app, in this case this Bitcoin-based app, would take off. It's what happens when social media is tied so closely with finance, with trading friends like tokens or like stocks, because it seems like these major influencers, they're jumping from one app to another in search for profit. It's not the type of behavior that you see from traditional social media, where if you land somewhere and you have your friends there, you stick around because you're building a community, you're building a following, you're interacting with people. But when you introduce this finance aspect to it, then it's about what can give you the best return. And so you see this behavior of just jumping around these different SocialFi apps, which are just clones of one another. Stars Arena, New Bitcoin City, Friendtech, they're all copies. I mean, Friendtech is the original, I guess. But it seems like now that took off and did so well, there are so many copies, and then all these influencers are just chasing the next one and seeing how they can profit from it, which is a bit off-putting, to be honest. Anyways, moving on to different project updates. So interesting, Polygon is launching a new token, POL, to replace Matic. So as you all know, Matic has been the long-standing Polygon token, but now that Polygon wants to launch a new proof of stake chain to allow restaking. It wants to have a mainnet Ethereum token. This is POL, which will unify all of its ecosystem of different layer 2 chains. Polygon has really become this powerhouse. It has so many different options for blockchain networks. It has a proof of stake chain, CK EVM. Oh, there's a CK Stark based chain. Anyways, there's this whole ecosystem that they've built, and they want this POL token to unify all of that, and Matic holders will be able to migrate to POL. Next, this is a story that we broke. Arbitrum is launching Orbit, which Orbit is a tool that lets developers create their own blockchain. So I imagine it's kind of like a WordPress for blockchains. Really interesting solution by Off-Chain Labs, and it's ready to launch. Next, this is very interesting. So the Wall Street Journal came out with a story saying that Hamas, the terrorist organization, had gotten a lot of its funding from crypto, that it had raised around over $100 million worth of crypto since 2021. The article got cited by Elizabeth Warren, who of course took the opportunity to criticize crypto and call for greater regulation and so on. But then the two reports that the Wall Street Journal was citing came out correcting the record. This was Chainalysis and Elliptic, and they were saying, no, actually, you guys have it wrong. A very small amount of funding for Hamas and for terrorism came from crypto. They explained how the journalists had misread the data, and that actually only about less than $1 million, about like 400K or so, had come of funding for Hamas had come from crypto. Now this happened over the last few days, and the Wall Street Journal has yet to correct its story, which it's a shame. Like, the two reports that you're basing your story on come on and say you're wrong, and the journalist doesn't correct it. It's from a place like the Wall Street Journal, it doesn't make any sense that would be allowed. And it goes a bit in line with my review of Bloomberg's SBF documentary, which, here's my review. It's great. It's very well made. It's a really thorough, detailed overview of the rise and fall of SBF and FTX and Alameda, but it falls short on two crucial aspects, which is it was really soft, or not really soft, but it was not hard enough on SBF, and it had some really questionable interviewees. So the reason why I think it wasn't hard enough on SBF is that it characterized the core of the wrongdoing, the fact that Alameda Research stole funds from FTX customers to trade, and that it covered this up for years. Instead of saying that for its name, that, SBF had built his empire by stealing customer funds, Bloomberg kind of like dances around it and says that Alameda had borrowed customer funds, posting FTT token as collateral, and they had done this after to cover up a hole after the Terra Luna blew up. Terra Luna only made things worse, but this was something that they had been doing for years. So anyways, I was disappointed in seeing this narrative, and then also disappointed to see they had interviews with like Susu and BitBoy, which, like different people accused of scamming, talking about another scammer. It doesn't make a lot of sense to have, Bloomberg can have almost anyone, like all the most reputable people in crypto talk about SBF. So I wasn't, it didn't make sense to me that they chose these people to do that. So, this and the Wall Street Journal coverage, I think like mainstream financial media has come a long way in covering crypto, but still definitely a lot of work to do. It just continues to dismiss this industry. And I think it's easier to do that now that, we're in the middle of this bear market, which, like I said, if it's just going on the ETF news, I don't think it's over. So yeah, it's cool to look down on crypto again. And so, we're getting this kind of coverage, which is a shame. And it's why you should trust the Defiant for your crypto and DeFi news. So yeah, thanks everyone for joining me this week and hope to see you all next week.